Hi everyone, today might be a volatile day as I'll explain later, so let's look at my medium time frame, low time frame and micro time frame, including potential trading setups to make sure we are prepared. If we look at the final leg to the upside over here, you can see the blue count is a 5-wave structure where I believe wave 5 is already finished. This means that this wave 1 over here is an extended wave because the targets for wave 2, 3, 4 and 5 then change. In a extended wave 1 impulsive move, the targets for wave 2 are the 236 and the 382. Wave 3 does not have a target. Wave 4 most common target is the 236 and the 382 as well. And for wave 5 the most common target is between the 0.618 and the 0.786. Taken from the low of 1 to the high of 1 to then the low of wave 2. And as you can see, price did wick inside this area before it started to range for quite a long time, which makes me think that this is the beginning of a corrective structure. Now the potential trading setup we had was lettering the shorts inside this area. Of course, no financial advice, stop loss above, trading it to the downside. However, seeing how price is acting over here, I still do expect, and I'll show you my preferred counts on the low time frame and micro, I still expect a move to the upside before eventually a move to the downside. So stop loss break even would be very sensible. If we now look at the corrective structure that I am thinking of at the moment, I'm thinking of some sort of an expanding flat, which is a 3-wave in the first structure over here. So then it's an A, B, C. So a 3-wave, 3-wave, and then a 5-wave move to the downside. Before then a bit of ranging and then another drop to the downside as well. What you see over here is called a bars pattern. You can find it right above the icons on the left side and then go to bars pattern. And then you can copy bits and pieces from the chart, basically history from the chart, and then try to put it on the current price action. Is basically also called a fractal. So this is a part of previous price action basically. And yeah, this is what I'm looking for with then an expanded flat where the most common target for this wave B is between the 1.236 and the 1.38, which is basically between 29.6k and about 30k. Also nice confluence with the weekly naked point of control and the weekly over here. And my target box, which has in general an area of confluence for a little bit of resistance. Then we could drop to this target box over here, which is sitting at 24,850 to 24.3k. Eventually a little bit of ranging where it's very likely this high is going to reach the point of control of this range, touch the point of control before then a move to the downside, where the most common target, if this is a wave 2, is the golden pocket. However, the golden pocket also simply has nice confluence with this target box over here, which is sitting between 22.6k and 21.8k. So yeah, this is a very interesting scenario. You do see that I have the very bullish 1-2-1-2 on the chart at the moment over here, but that is also just to explain that I believe this wave 2 is very, very short compared to this wave 1, as this wave 2 is only 23% in the time it took to develop wave 1, and usually a wave 2 is at least 38% of the time of a wave 1. So yeah, this is a very, very short wave 2. However, this can be part of the bullish count, absolutely, but this can also be the first structure, this one, of a bearish scenario for more downside to come. If we then look at the lower time frame counts supporting this medium time frame scenario, which is then also currently my preferred scenario, that is, I'm looking for this. So the end of wave 5 is over here. We have the first 3-wave structure finished and then a WXY, which is then part of a bigger A. Wave Y ended perfectly inside the 1 to the 1.236 fib, taken from the high of 5 to the low of W to the high of X with the trend-based fib extension. And we had the long setup over here, potential long setup, lettering in this area, stop loss below, trading it to the upside for a wave B. By now, of course, stop loss should be break even in case price is going to drop and reach these levels. Now, if we then go and look at the chart, you can see that I highlighted one significant part on the chart, in my opinion, which is the double top over here, which actually is a triple top. Now I look at it, we have two tops over here, 2 highs and 1 high over here. Now price did not reach the high, so there's liquidity resting here, here and here, and it's like a magnet for price, right? Like there's this area over here, 28.8k, is like a magnet for price, lots of liquidity, which makes it very interesting for price to eventually move to the upside and take the liquidity. And that is also what we're looking for in this particular scenario, as this is then the low of wave A. We'll be looking for a 3-wave structure to the upside in a wave B, as a wave A and a B are both 3-wave structures, for then a move to the downside. As mentioned, the target area for B are the fibs over here between 29.6 and basically 30k, with confluence here as well. well. A rare target for wave B is the 1.618, and that's the reason why the stop loss for this potential short trade is above the 1.618 for then a move to the downside. If you then look at the more, bearish scenario, which eventually is bullish as well, but it basically means we're going to have one more move to the downside. So a WXYXZ. And this also means that we are going to hit the target box that I have over here, which we actually just missed for this wave Y, which is usually not really something I like, but of course it can happen. I have no problem with that. Important to know though is that in a WXYXZ, the by far most common target for wave Y is the 1-to-1, which it has hit very nicely indeed. And now we are finding support on a rare target for a wave Z. However, wave Z should be below wave Y, at least that's by far most common. So the 1-to-1 to the 1.236 is the most common target for a wave Z, and then below this Y over here could be the potential longs, and then eventually stop loss below these lows, trading it to the upside for then again wave B around 30k. Important to know is that I think below these lows there's not much support, and if we go below these lows, I can imagine we drop to at least a target box down here at 24,850. So that is quite a drop. So for now, if we want to see the 30k area to be hit, it is, in my opinion, very important to stay above these levels at about 26.5k basically. So yeah, this is an alternative scenario. If we then go to the micro scenario and have a look at what has happened over the past, a couple of days actually, since the low of Y has been made. So over here the low has been made, and we're looking for this like three-wave structure to the upside, right, for then a wave B. Now the first structure was very nice, a zigzag over here in a wave W, reaching some targets very nicely, creating bearish divergences over here, which gave the potential short setup, stop loss below the high. Main target being this one over here, because we'd be looking for something like a WXY as a preferred scenario. So this then being a W, then we have wave X, and then eventually wave Y. What is nice about this scenario as it stands at the moment is that the low of wave X over here has been made between the 1 and the 1.618 fib time, taken from the low of W to the high of W. And that is also something that I just like to see. Also, it has bounced exactly on the target box that we had over here with a couple of confluences. We had the daily range value area low and the golden pocket all at this area as well. And what I think was very, very interesting as well is we made a bit of a double bottom with these lows over here. And when I made the video over here, I said, what I would really like is price coming down, taking the double bottom and the liquidity before then moving to the upside. And of course, the potential trading setup was already given before price even reached this area, as it basically is laddering or starting laddering or entry positions to the downside the moment we hit the target box, stop loss then below the low, once again trading it to the upside for then potentially the 30k area as basically being the main target. So currently we have had the swing failure pattern, basically taking the liquidity, coming down once more for a potential retest, moving to the upside. Looks very much like a three-wave structure, right? Then we have this move to the downside over here, and we currently are bouncing on this little 15-minute order block right here, which is the white box that you see, as well as the golden pocket from this low to this high. If I show you this quickly, you can see that also this wick had hit the golden pocket for then a little bit of support very nicely. Now if you then go to the CVD chart and have a little look at what has been happening on the CVD, it's a bit of a mixed bag at the moment. So if we look at the yellow line first, the yellow CVD, what we can see is that more locally actually over here, between this high and this high, we have some bearish divergences, right? Very clearly. However, this one already has played out because we took this low, and that is what it means with CVD, is the moment you then take the low or the high in between the lows or highs that create the divergence, it has been played out. So this one has played out. But then we go up once again, and as you can see, this high still creates a CVD over here that is higher than the one we had over here. So one can still say, we still got some bearish CVD going on, right? There's still some sort of absorption. However, if we look even more locally, you can see that between this low and where we are now, CVD is creating massive bullish divergences. So it's a bit of a mixed bag. You can't really like know what's going on, but of course in our scenario I wouldn't really like to see price go below these lows, because I do think if price goes below wave X, I can imagine price will go below this wave Y as well. There's also not much liquidity resting here anymore because this wick already took the liquidity. So in my opinion, I would definitely like to see more upside, and therefore having these bullish divergences on the very lower time frame is well, good to see. Of course they can be leading and price can dump to the downside, right? Because no indicator or whatever strategy is 100%, but it's in the context that we have with Elliott Waves, it is at least good to see. And the blue line, however, is creating the bullish divergences over here, creating some lower lows on the CVD line, higher lows on the chart. So yeah, we got to see how that is of course gonna play out, but my preferred scenario at the moment would be to go towards the upside and maybe even reach the triple top today, because it might be a very volatile day, which I'll explain in a second, as mentioned. But I think it is quite a stretch to reach this area, because this is a three-wave structure, so this is still a corrective pattern, which can happen to the upside, of course. But yeah, we have to wait and see. Then we have the micro more bearish scenario, where eventually we would go a little bit to the downside. So that this is a three-wave structure in an A, not a W, and then we have a wave B, and it is so this is a 3-3-5 move, while a WXY is a 3-3-3 type of move. So in this scenario, this is still part of a bigger wave B in a W, then an X, or wave X can go a little bit higher to at least take the first high that was made, and then eventually go to the downside to reach the target box that we missed with the low of this wave Y over here, before then grabbing that liquidity, finding the support for an impulsive move to the upside, basically creating an expanding flat in the bigger B wave. If this is an A, B, C, then inside this B we create an A, B expanding flat, C to the upside. So this is still a possibility. That is for me an alternative, and in this particular scenario the potential long setup over here would be laddering down here, again stop loss below the lows as already mentioned, and then trading it to the upside. The most common target for wave B expanding flat is the 1.236 and the 1.38 down here, which is between 26,890 and 26.7k. I think the 1.38 is really deep, like you're getting very close to these lows over here, so I would have no problem hitting the 1.236, basically wicking inside, closing inside the target box, moving up, but going all the way down to the 1.38, I think we might be able to reach these lows and find more downside. So yeah, preferably of course we stay above it. Then why is it going to be a very likely going to be a volatile day? It's because we got some stuff going on in the news. So if I take the news, this is Central East European time, so you want to find your own time zone, link in Discord. But over here at 2:30 p.m. Central East European time, we have 3 high impact things coming in the news. I have no idea what this stuff all means, but I just know that if there are red flags and there is news with red flags over here, it creates volatility. And volatility means you have to watch out with your trades and make sure you trade safe. Have a good plan, good strategy, good entry requirements, because price might do very unexpected things. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.